All right. How is everybody doing today? This is Big Jonas. Hey, there you are. Here I am. Thank you so much for joining me. I just wanted to come live with you guys and to talk about some very interesting price action we're seeing in Bitcoin. What another memorable day, memorable week. What a month of price action we've seen here. And I definitely want to talk about it. But before I do, remember to hit that thumbs up button if you enjoy my content. Remember to hit the follow button as well. I have some affiliate links down there as well if you want to support this free channel. Also, you guys can follow me on Twitter. I am at Big Jonas. I'm a Bitcoin believer, also a crypto mentor, an educator, a chart explorer, a leverage trader, an investor, YouTube creator, and I do have a private group with some good buddies of mine over at the fluxtradinggroup.com. Fluxtradinggroup.com. Check it out. Just had one of our biggest winners there, Bolt, talking about that since September, up over 300% since then. We were in it well ahead of the game, and you could have been too if you're a part of the group. Come join us and find out what the next big winner could be. Fluxtradinggroup.com. All right, there's Twitter. And there's Bitcoin. All right, so let's talk about some, pretty interesting Bitcoin price action. I want to kind of start with a wide view here on a daily chart. We've basically been trying to set our bias here as, well, we're still holding a very nice bullish parabola, and then we got to kind of pull it back a little bit, but we're still holding the overall parabola. We got to pull it back a little bit, but we're still holding the overall parabola. And once again, we're basically kind of clutching at straws here as we continue to get lower and lower, and we continue to kind of spread out, where that potential of Bitcoin price action support, over this whole thing, really could be. What's really so interesting here is that what's been the driving force of Bitcoin over the past several weeks has been this sense that China was about to deregulate. They were about to get really heavy into crypto, and what happened is we actually had um, quite a pump, one of our biggest pumps, more notable pumps in the price action of Bitcoin. This is back here at the end of October. And within 2 days, Bitcoin had risen $3,000 and almost 40%. And that one move there caused the market to get very excited again and quite bullish again after not only regaining an area that broke very bearish back in the late part of September, but the fact that Bitcoin was over $10,000, even briefly for a moment there, did show that there were buyers willing to take a leap here in the 10K range. Let me fix my mic here for just a second. This is clearly not what I wanted to do. That's a little better. Maybe that will stick in. um, and since then, this entire 4 weeks of price action, right? We started, that was our top. This is where we are now, 26 days later. 26 days later, almost a month later, we are literally from today's lows just a hair above from where this all began, where this phantom pump, whether you can use it as, okay, it was, sometimes we talk about China FUD. This was kind of the opposite of that, where we have the situation where that caused more people to be like, okay, we're going to retackle these key areas of resistance that have been resistance. And what am I talking about here? I'm talking about lower highs, people, ever since June, ever since the time where we have found resistance, 13.8, we found resistance at 13.1, we found resistance at 12.3, we found resistance at 10.9, and even with this crazy pump, we still found resistance at 10.5, and we still put in a lower high. Go to log here. Okay, now the intraday, we were able to break through this resistance, this wick resistance, right? Hit it to the penny, to the penny, to the penny. Didn't even get that high there on September 7th. Broke through it and had these couple follow-up candles the following days that really showed the continued strength of this falling resistance line. A line that has been a great place to pull shorts and to exit any longs you may have had, and that has been very consistent all the way through here. So we're putting in these lower highs, but we're also putting in these higher lows. Well, let's look at it. We were putting in higher lows. We were putting in pretty decent higher lows when we were in our consolidation here. Okay, trying to hold this triangle, trying to hold this wedge pattern, pennant, if you will. We didn't go here and argue the fact that we were holding these higher lows here, which we were low, higher low, higher low. We went to a lower high, okay, but then we had the bounce, which broke us out of our bearish equilibrium. And once that failed to go through, this has been resistance ever since. Now, what constitutes a high or low? Well, technically, we haven't fully retraced as low as we got here back in October 23rd candle. We are still slightly above it by dollars when you look at the situation of where we're currently holding that support. But does this give us confidence that, okay, we're back to, 7.3, 7.4, 7.5, 7.6, and we're in an area again of a good value for a Bitcoin price action, a good area to once again reload those longs because we've bounced here before. Not only have we bounced here before, we set in the last leg of our bullish move here into June with the support of the $7,300 area. Okay, we did this. So we get a lot of history now with around the $7,300 area, and once again we have brought ourselves back to it on some decently bearish volume here. I want to run through a bunch of indicators, kind of tell you what I'm looking at, but I do want to start with our overall price action from a horizontal standpoint. And at this area, once again, how many wicks, lower wicks do we find ourselves finding in this 7.3 to 7.1 range? We've been here before. We're back here again. And how many times are we going to be testing this 7K range and expecting it to hold as support and expecting this bullish continuation of Bitcoin to continue, even if we got that next push here, okay, and we're able to find an advance from this thing here, we could still hit this line, which has been consistently rejecting Bitcoin bullish price action. And depending upon how quickly, which angle, how many days it takes, now we're talking about 9K, really. 9K. And what about that 9K? Well, the 9K, there's a lot of history there this year as mega support, actually mega resistance, turned mega support. Now clearly back to mega resistance again. So there is that bullish scenario where we can find support here. Once again, retest this falling line of resistance, get us up to about $8,900, $8,800 there, and see if that is an area that Bitcoin bulls can basically tackle and punch through. Okay, but what do we have to do to get through there? Well, there's lots of moving indicators, other indicators that we have to check out. I want to start with EMA 12, EMA 26. Listen, on the daily chart, once this bear cross, this was our signal. This was a bear cross back on November 15th. The price action was still in the mid 8Ks. Okay, this was our signal that we didn't have the hold of the bulls to hold the bullish bull cross that we achieved from this pump here. And because of that, EMA 12 is now and 26 are both acting as resistance. This was a warning almost 6 days ago, okay, that the bear cross was in full effect on the EMAs that I prefer to use, EMA 12 and EMA 26. Ichimoku Cloud, daily chart. I have adjusted my indicators here. I am at 20, 60, 120, 30. These are not the standard defaults that you would get on TradingView. I do like to adjust mine as a personal preference. But as you can see, it is very accurate in defining the closing candle resistance on the daily of all these attempts to break into the cloud. Even the bullish one still found that lower cloud span as resistance. And it continued down and down and down. We had Tenkan-sen bear cross down through Kaijin-sen. Now even losing support on the lower cloud span as we go lower. And now our cloud basically is around 85.80 is where our lower cloud span is. Where a few weeks ago it was as high as $9,500. So in itself has dropped almost $1,000. As you can see in the future here, the Ichimoku is a future teller in a way, where we aren't closing in on a bullish Kumo twist. We're actually expanding bearishly here as my microphone falls out. as as we are still expanding bearishly here, and we can see this as a situation where we could continue this. If we continue this bearish spread here, we will continue to spread out and to expand that span of our indicator. Let's try this now, see if that works. So this has been very accurate here on the Ichimoku. We can see our moving averages, MA50, our brown line here. We've been watching, I talked about this last week on Twitter, right? There is our 100th down below 200 bear cross. And as you can see, the 50 was acting as decent support, right? We had several closing candles. This evening's show is brought to you by Malbec. Until that failed to hold support. Especially this candle here we had on the 17th was quite notable. That we were above the 50 intraday, but we did fail to hold it. And because of that, that rejection was another signal, a precursor to things to come. So now we are way below our 50, we're way below our 100, we're way below our 200. And now our 200, which has had its upward trajectory, right, is getting flatter and flatter and flatter. Our 50 is obviously angled down, and our 100 is obviously angled down. So we can see the ebb and flow of the market over the past couple of years here, as all three, 50, 100, 200, were all in an upward trajectory. Then we had our bear market of 2018 when they were all in a downward trajectory. And then we see we basically were able to achieve our bullish cross in May when all three indicators were once again layered accordingly, 50 over 100 over 200. And now we're beginning to lose that once again, just as we had done back here. Quick shout out to who's in the chat room: SS Swartz 88, Cornholio, G Farid 2010, Antonio Gatan, AD, howdy to you, Wreck Trader, hopefully you're not too wrecked, Green Zen 99, nice to see you guys, and everybody else. 72 of my closest friends watching right now. Please feel free to hit that thumbs up button if you are enjoying my content. Remember to hit that follow button as well. And of course, definitely follow me on Twitter. I am at Big Chonas, and the Flux Trading Group. Definitely love to check us out, and love to see you over there. Getting back into Bitcoin price action. We're still finding these MA resistances. Now, TD sequential. This is where it gets interesting here. We are on a daily 9, folks. I'm going to zoom in so you can see exactly what I'm talking about. Also, shout out to Tone, who was gracious to allow me access to his TI indicator, which is pretty sweet. It gives a lot of information that the basic information of TD that you have on TradingView does not. But we are on our daily 9. Now, from a bearish standpoint here, we can see the last time we actually did hit this daily 9 here was not the bottom, right? We hit the 9. It was a perfected 9. And then we actually kept leading another almost $1,000. So we are hitting a 9 here. We have passed the sequential 13 as well. We're hoping to find some support because of this, okay? But just because we're hitting a 9, maybe it could show us a couple days of consolidation, a 1 to 4 candle correction, if you will. before the potential of a continuation. What would get us to that continuation and break this cycle would be closes above $8,200, which would definitely convert this from a bearish count to much of a more bullish counts. These are things that we're continuing to look for. So that's where our TD9 stands. Bollinger Bands. So the daily BBs were tighter. They have widened. We are now closing or 35 minutes away from closing out this candle, potentially below the lower Bollinger. What's happening here, though, as you can see, we are expanding the width of our lower Bollinger here. We're expanding how our Bollingers are beginning to spread. And from a daily chart standpoint, even though they're spreading right now, they got running room. This isn't a very bearish setup just yet because there's running room in the Bollinger Bands to go. Now, remember, we've seen this before. When the bullish, we can get really wide here, okay? And when we go bearish, we can get really wide here. And we're still pretty tight, relatively speaking. So because of that, we have running room to continue the expanse of our Bollingers. Middle Bollinger at $8,700. Let's look at some indicators also on the daily chart. This is our on balance volume. Now our OBV is actually holding up a little better than our price action. As you can see, our price action would have been concurrent with roughly where the pump started. As you can see, we're actually holding a decent amount above that. So we are seeing a very slightness of OBV. Okay, support there. We do have our RSI that has dipped below, putting in a lower low from where we did find that area of support. 28 on the daily. Yeesh. Okay, and not only that, we were finding this line. I had it already there. Looking forward to hold as support. And it could be one of those lines that could act as resistance, right? Of any kind of a bounce there. Let's keep an eye on that. That would basically put the RSI somewhere around the 41 to 43 area on the daily. Daily stochastic, we are getting closer to pancake here when both of our indicators are in the lower zone. And from a daily standpoint, we're saying, okay, we're basically back to our zero line again. I do adjust my stochastic to 1090 versus 8020. So we're very low. We're due for some relief here, right? Something like that. Maybe we have to squiggle around here a little bit before we start kind of trending up here with our indicators. Definitely possible. Um, but personally, I like to use the stoch on the lower time frames because what we've seen in this market is on the higher ones, we can have a lot of drawn out length and distance on these areas. But because the stoch is currently where it is right here, I am looking for we're closer now to hopefully a support because of where I'm seeing the daily stoch than we were when we did have our initial bounce here, and we did find that basically, okay, we're finding support in the mid to low 8Ks. Maybe 8K will hold again, and then it was just like quicksand, fell right through. The reason that this pump of Bitcoin price action that we had was always so suspect, it really had to do with the fact that when it did pump, and it was this little spike here on our Chalkin money flow, it literally hit zero line resistance. And it hit zero line resistance and has maintained price action or indicator action below the zero line. Zero line, CMF below it. Because of that, there's no new money coming in. There was no follow up to that pump. We had nice little moves here and there, but they were lower highs, and this all happened below the zero line. And we can go back in time here, you know, where Bitcoin was in its bearish kind of momentum here. And was constantly putting in these lower highs, right? High, lower, high, lower, high, lower, high, until we change that with our bull market of 2019, and up we went. And now we are once again reverted to this falling lower high and lower low scythe pattern, if you will. The accuracy of the CMF, it tells us what kind of a market we are in. This is bearish CMF price action here. The way we're seeing these lack of money flow versus the way we had seen very similarly to our bear market of 2018, to where we were able to break out of that with actual money flow that peaked in April and then had a lower high peak in the June, literally marking our top. And here we are way down here. This is telling me that as of yet, there's no real money, no new money coming into Bitcoin. And we can clearly see that. MACD on the daily, once again, we are still seeing continued bearish histograms, okay? Continued lows in our indicators, and running room, if you will, to go much lower, because where we've been previously at the depths way down here, and we're still way up here, we're just below our zero line, right? We're just below our zero line. At the depths. Sounds pretty good. So what is this telling us? Bitcoin setting up for support here? Or we're just beginning this process here? The last indicator I want to talk about on the daily is the funding rate. Now, not everybody leverage trades. That's fine. It's not for everybody. Actually, it's mostly not for many people. But there are things that we can derive from the data we get in regard to leverage trading. And that data can tell us which side of the market most people are on based on the funding rate. And when we have a positive funding rate, when we're above our zero line here, like we currently do now, that tells us that a majority of the market is long. And when they are long, they have to pay to be long with a fee that is recurring based on the perpetual swap. So they are paying to go long or to continue to hold their long, and it is a value to short the market. And this has been a counter trading indicator ever since. When Bitcoin has had a negative rate, such as where we peaked here on October 23rd, when everybody was super bearish, including the market, right? What happened on October 23rd? Oh, we had the beginning of that big pump. That was the extreme lows right there, and then boom. And ever since then, the funding rate, longs have been paying to go long, and they've been paying to get liquidated. Shorts has been the play this entire GD month, okay? And until this flips, until we're going back to not just short, but real short, a consensus of money goes short, it is still in the best interest of the exchanges to continue to dump the price of Bitcoin to offset the amount of money that is currently long in the market. And this is still positive, and this is very meaningful. Shorting the market means you are betting the market will drop. And you can do this on exchanges like Duodex, where you can short the market and basically you make money if the market goes down. So if you shorted the market at $10,000 and we're at $7,500, then you are up $2,500 on every Bitcoin leverage that you shorted. So because of that, because of the availability to make money on both sides of the market, do you ever think about why we get these crazy wicks sometimes and why they end up stopping where they are and why we find some bottom supports where they are and these long-legged intraday swings? It's to get people out of their higher leverage trades, either on the long side or the short side. There were people that were short from 13K, 12K, 11K, more power to them. And they were just sitting in their short. Hey, I'm short. We're going lower highs and lower lows. Going to hold it here. And up until then, they were pretty safe. But this candle here really tested them. Because if they wanted to hold their shorts from, let's say, above 11K, okay, came very close. And I bet you this bullish candle stopped out a lot of shorts that were just, lowering their stop loss all the way down, keeping a buffer, we're down here, but I'll absorb some, bullish price action to assume that the overall trend will continue to go lower. And this bullish pump we had on October 24th, 5th, and 6th, or 5th and 6th, took a lot of those shorts, higher leverage shorts, out of their play. And if you're still in your short from, above 11K, nerves of steel you have because you then absorbed this almost $3,000 per Bitcoin pump in 2 days, and then you waited 28 days to basically get you back to where you were at ground zero here at $3,500, at $7,500, which is still the short in play because of these lower highs. So these moves aren't just random, they aren't just happen for a reason, they are reasons behind this. And a lot of that has to do with the funding rate, which determines which side of the market most of the money is in. And right now, people are still longing Bitcoin based on the funding rate. Not as much though. See how the funding rates dropped the past couple of days. That could be the beginnings of a capitulation sign of longs. And remember, as soon as the market turns short, Bitcoin tends to pump. As soon as the market turns very long bullish, you know, counter trading this market, doing the opposite of what your instincts are saying to you. When you see a green candle, you're excited because you can sell into strength. When you see a red candle, you're excited because you can then buy into weakness. It's the opposite of the human instinct. You want to run away from a red candle here, or are you seeing it as an opportunity? You don't want to FOMO into a green candle here because you're seeing it as a better chance to short at a higher price. These are the things that traders, that leverage traders, grapple with daily. Look at some lower term time frame price action. So 30-minute, this candle we had here several hours ago hit 37.76. We had almost a $300 pullback in that half-hour candle. Actually, we'll go to the 15-minute, a little more accurate here in terms of what happened so quickly here. And we've been ranging ever since. Volume has been very steady. We're having at $600. Our oversold, we were lower in the RSI, very low on our Stoke, low on our CMF, low on our MACD. But more importantly, we were well below moving averages, EMA 1226, that with sideways price action has allowed the price action to kind of, catch up to them. Similarly, higher time frames, the 4 hour, 6 hour. Actually, you want to go to 6 hour because we can see how strong that EMA 26, which is our yellow line, has been. Resistance, resistance. Now our 12 is resistance, resistance. And again, when we're overbought, when we're oversold, okay, when our price action is far away from our EMAs, far above our EMAs, these tend to be signals to go the opposite as the market needs to catch up and our moving averages need to catch up. Now, as you can see, the extremes can tell us when we're oversold, when we're overbought, oversold, overbought, but this has been bearish price action. So oversold isn't necessarily the oversold we think it is, because we're no longer doing consolidation here. We've lost our bullish equilibrium, and we are putting in lower highs, and just for the moment now we are still holding our ever slightly higher low. The bulls have several more days to potentially save this weekly candle here. Nothing good about this weekly candle yet. We still haven't bear crossed our weekly EMA 1226. We're just about to tap them. I do like to see these first taps holding, so we're getting very close to testing our EMAs on the weekly chart. And for me, that could be a signal that we're getting closer to some sort of at least short-term support. That could be the situation that we're seeing in the near term. I do want to see what kind of volume we actually end up with at the end of the week. But these are the things that we want to see as this weekly candle progresses. Because our weekly RSI is put in a lower high, now at 42. Our weekly stochastic has running room again to go back down below our zero line. Our CMF has been below our zero line for several weeks. And our MACD has put in a lower high, or a lower low, I should say, on our histo. And our indicators have spread once again and are basically racing towards that zero line here. So I just want to stress that the past 4 weeks of price action have basically given back this high-legged candle where a lot of people got very bullish very quickly. A lot of the content that I've been putting on Twitter. Listen, how many of these charts were we seeing on Twitter all week long, all past several weeks? A little consolidation here, and then bullish continuation. A little consolidation. Here we go. Nope, nope, not maybe this time. Nope, nope. Maybe this time. Nope, nope. Maybe this time. Nope. This time. Nope. This time. Nope. Okay. So we get influenced by a lot of people. We're online. We see things. Bullish tweets get a lot more likes, and a lot more retweets than bearish ones do. Sure, hopium is great. Nothing would make me happier than to see Bitcoin continue to rise back over 10K infinitum. Okay, but there's realities. And the reality of this tweet is very significant to me. I put this out over a week ago, and I asked the question, 3 years ago, on November 12th, which was about 10 days ago, I should say, was the last dip under $300 before Bitcoin 20K. 2 years ago, the last dip of $5,500 before Bitcoin 20K. 1 year ago, the last chance to sell at $6,300 before a 50% drop to $3,300. And 10 days ago, at 87.50, I asked the question, last chance or last dip? And for now, the last dips are clearly winning. November, at least last year's November, was not pretty for Bitcoin. Here was November. Here was the week of the 12th. Okay, look how similar these freaking candles are. Okay, this one right here, this current one right here. Note we were already in bear cross on our EMAs. Note we were already found MA50 resistance. Hadn't even broken through MA100 yet. And as you can see, we're still above MA100 and MA50. Okay, so it's different. It's not the same setup as we had last year. But the follow-up candle, next week's candle, we see what happened a year ago. Bitcoin 5,500, Bitcoin 3,500. Bitcoin dropped $2,000 next week a year ago. So what does that mean? And what are the possibilities that we can see here? These aren't the same situations. We're not in the same situation as we were. But it's hard to argue with our current price action. It's hard to consider that for the third time, the mid $7,500 area, the mid 7Ks, is once again being tested. And that because of that, are we supposed to assume that we're in some sort of super strong area of support? Our VPVR tells us after our current price action, our next major area of price history support is around $6,500. Now, why is that? Well, all this history here, all this history here. And we have basically a decent cluster, you know. But then once we lose 62, 63, there that window opens right up. And the window opens right up for potentially a lot lower prices. But I don't want to scare you. I don't want to go there just yet. And the reason I don't want to go there just yet is because even though we have retraced where we have, okay, everything's relative. We're at $7,600, okay, but you know, um, the first week of January we were at $3,500, so we're still up 100% on the year, but we are down almost 50% from the highs of the year. Now we did find that support and a good ass bounce, right, just a hair above our 61.8. We're still holding above it now. Our golden ratio does bring us down to our pocket as low as $6,800. We're finding 55 resistance. So these are the things that we are looking at from a Fibonacci retrace from the lows of the year, or sorry, from the price action lows to the highs. Swing low, swing high. Okay? But we can also look at this other ways. Bitcoin 20K, Bitcoin 3K finds mega resistance and our current top literally in our golden pocket, literally in the middle of our golden pocket. And our lower highs have found resistance at the 5.5, have found resistance at the 382, and we found a resistance at the 382 on the weekly close, literally right below the 382, which was a warning sign. Whoops, which was a warning sign that said that we can't close a weekly candle above the 382. And ever since then, right, next week we got above it, closed below, and then the week after it was literally our nut top, 95, then lower, lower, lower. The 236 is at $7,100 ish, depending upon what exchange you're on, yet to be tested yet. And from there, we know where it goes. I'm bearish Bitcoin below $9,600. And if we fail to hold the $7,100 support in the weeks to come, I would be very bearish on Bitcoin and expect much lower prices if the 236 then becomes closing weekly candle resistance. Almost done here, but remember guys, 78 of my closest friends watching me, please hit that thumbs up button if you're enjoying my content. Please support the channel with the affiliate links I do have there. Please say what's up and subscribe and follow me on Twitter. And of course, check out the Flux Trading Group, fluxtradinggroup.com. I want to be bullish. It would help me out. It would help a lot of my friends out to be bullish, right? To see Bitcoin rising in value. But for now, we have to be honest with ourselves here in the chart. Maybe we're starting to finally get to this oversold conditions, right? 3 weeks of going up. Switch this around here. 3 weeks of going up, up, up. And now we're going down, down, down. Maybe we're going to find some support here. Maybe the market feels that there's a value here in the mid 7Ks. But let's just face this fact that we need new money. Crypto needs new money coming into the market. Okay. If there's no new money coming into the market, then where's the money coming from to pump Bitcoin higher? We can see Bitcoin dominance still around 67, 68. We were seeing some altcoin momentum. Whoops. Kind of show itself. But today's price action, the bearish dump, we actually saw alts bleed more. And that is being shown here by this little uptick we have here. Bitcoin dumps, alts dumped more. And we found support right at 68%. Now we're just 68.5%. Wasn't a big dump, but it definitely showing that Bitcoin is still stronger than alts at the current time. And this can rise, folks. If Bitcoin dominance rises, then there could be a lot more blood in alts left to come. Altcoin money that was still left in altcoin was sucked out this year, put into Bitcoin and some specific alts. Bitcoin dominance rose from the 50s to the 70s. And now we're basically still almost at 70. So Bitcoin is saying to the market now that I am still king. Whatever I say goes. And whether I dump or I pump, we're still seeing alts now are weakening because of that. And until Bitcoin dominance drops below 67, okay, which has been very strong support from a dominance standpoint of the support here and now the support here, okay, this is the strength. This is like the altcoin bullish below, bearish above. Bitcoin stays above 68 dominance. This is bearish for alts. If it drops below, that'll be a bullish sign for alts. But I wouldn't expect alts to then rise if Bitcoin falls. I think Bitcoin needs to rise in conjunction with alts. And the only way that's going to happen is with more new money coming into the market, new retail investors coming into the market, getting excited about Bitcoin because maybe they feel there's a good value or a good price point at this current price point. Until we see a turnaround, until we see the market feel like, yes, there's good value here. Yes, I'm going to hold above these key supports. Yes, I'm going to find support on these moving averages. Yes, I'm going to find support on my lower Bollinger Band. Yes, I'm going to find support and break through my cloud. Until all these things happen, the bears still have the upper hand. That has continued to be proven so on our price action. Guys, Big Jonas, thank you so much for joining me. Thanks for hanging out today. Please hit that thumbs up button. Please give me a like and a follow if you enjoy my content. I like spending time with you. Hope you like spending time with me. Hope to do these again soon. Until next time, Big Jonas. Stay cool, stay safe. Remember to use your stop loss. Talk at you soon. I'm going to leave you with the 5-minute chart. Good night.